Dear students, Assalamu alaikum wa rahmatullahi wa barakatuh. I hope everybody is doing well and in good health. Today our topic of discussion is the trial balance worksheet. As you know, in the last lecture we have learned how to post transactions from general journal into their respective ledger accounts, and you have learned how to make the trial balance and what was the purpose of the trial balance. Okay, so let me repeat it in simple words. The trial balance is a tool which helps us in measuring the accuracy of accounting records, right? So if the total of all the debit balances we have in the trial balance equals to the total of all the credit balances as it is here in this situation, it means there are no problems, no mistakes. So the postings and the balances are correct. But if these balances are not equal, it means there are some errors or problems. So in that situation, you have to go back and review your accounting records, right, and identify the problems and error and then to correct them. So dear students, now we are talking about adjusted trial balance. So before to talk about adjusted trial balance, you must know what are adjustments. So if you remember, we had a lecture on adjusting entries, but I'm not going into the detail of that lecture, but simply adjusting entries are those entries which are recorded at the end of accounting period, and the purpose of adjusting entries is to meet the requirement of the matching principle. So a question here, what is matching principle? Matching principle is accounting principle which suggests that the revenues and expenses incurred in one accounting period must be recorded in that accounting period. For instance, if we have expenses in the January, so the revenues incurred or generated by the help of those expenses must also be recorded in the January. Simple. So that is what we mean by matching. We are matching the expenses and the revenues generated by the help of those expenses to be combinedly recorded in the period in which expenses are incurred. Okay, so dear students, now we have unadjusted trial balance, and we are converting this unadjusted trial balance to adjusted trial balance by the help of some adjustments, right? We are making some modification and changes, and that is by the help of these entries. So dear students, what are the steps? First, we are recording all these transactions in this journal, and then we are moving all the debit and credit values into the debit and credit sides of adjustments column, and then finally we will compute the adjusted trial balance. Keep in mind, dear students, adjusted trial balance is the final trial balance from which we will make financial statements, right? So the table in which we perform this function of converting unadjusted trial balance into the adjusted one, this table is called the trial balance worksheet. So it means we are working now in the worksheet. So dear students, before to pass all these entries here, make sure how many accounts are needed to be adjusted. So very much simple. So look here, we have some adjustments or adjusting entries related to ABC company. The accounting period of this company is 1 month, right, and ending at the January 31st now. So what we are doing now, we try to identify those accounts which are needed to be adjusted. So depending on these entries, so the first entry we have rent expense incurred $2,000. So dear students, make sure how many accounts we have in this trial balance, right, which are related to rent. Related to what? Rent. This is the procedure, okay, the simple way how to adjust. So just check all the accounts. We have only one account which is related to rent. So it's mean this account should be adjusted. How much is the total value of this account? $6,000. So if you remember, the prepaid rent is our current asset, right? And we had paid in advance at the beginning of the January. So this prepaid rent was paid for 3 months. So now after 1 month, out of this $6,000, $2,000 converted to expense. Why? Because we have taken the benefit from this prepaid rent, the rent used for 1 month. And this is the first type of adjusting entry of converting asset to expense. Okay, the second we have supplies. Okay, dear students, here in order to adjust this account, we need another entry also. Why? Because we convert this current asset account into expense account. But make sure, so are we having that expense account, right, which is rent? No, we are not having any rent expense account. So in that situation, we will include it at the end. So it is not necessary that all accounts or all entries we have in the adjusting entries list must have their accounts here. But if they're not having accounts, then you have to add or create account for them. Okay. So dear students, next we have supplies used during the month, $200. It means we have an asset by the name of supplies, and that is current assets. And how much the value of this supply is used? $200. Why? Because the used portion of the current asset, when it is used, that converts into the expenses. So that is why the supplies asset account should be adjusted. So when to adjust this account, we need another account of expense. Why? Because we convert this asset account to expense account. But do we have any expense account related to supplies here? No, we are not having it. So we will increase it, or we will add it at the end of the trial balance. Next we have goods supplied to ABC during the month, $3,000, right? So dear students, look here, goods supplied to ABC during the month, $3,000, for which the cash was received in advance. Keep in mind, when you receive cash in advance for services to be rendered in the future or for goods to be supplied in the future, then we are debiting the cash and we are crediting not the sale, right? Even though we have received for the goods, but we have not supplied the goods, so we cannot call it our sale. So what should be credited? The unearned sale account is credited. Okay, so look here, in this situation you must know that the company supplied some goods for which the company had already received the cash. So it means we must have unearned sale account. So come and check, we have unearned sale account. Yes. So look, we have unearned sale account of $9,000. It means we had received $9,000 in advance for the goods to be supplied in the future. So out of $9,000, how much goods we have supplied? $3,000. So this should be adjusted. It means the liability unearned sale account should be converted into the revenue. Okay. Okay. Next we have salaries of employees, $10,000. So dear students, it is the end of accounting period and salaries expense incurred, but the company has not yet paid it. So maybe the company may pay it in the future or in few days after, but it is the end of accounting period. So we must record expense, and this is what we know about the accrual basis of accounting. Under accrual basis of accounting, we have to make sure to record the revenues and expenses, right, irrespective of the cash payment or receipt. So here expense incurred, we have not yet paid, but we have to record it as we are following the accrual basis of accounting. So dear students, here we have to debit the expense account, and also we have to credit the expense salaries payable account. So just check, do we have any account related to expense among these accounts? Salaries expense? No. So we will include it in this trial balance as a new account. And finally we have goods sold to Ahmad and Bro, 5,000, but not yet recorded. So here you have sold goods on account. How much? $5,000. Now this is simply, you have generated the revenue, you have earned $5,000, but you have not yet recorded this value. So what you have to do, you have to debit account receivable. So it means the account receivable account is affected, and also you have to credit the sale account. So dear students, first try to make sure how many accounts are affected, right, or how many accounts are needed to be adjusted. Okay, so try not to be confused. Simply record all these transactions, Simply record all these transactions in this table, right? And then move their values into next of their concerned accounts. Okay. So the first transaction we have rent expense incurred $2,000. So dear students, it is the end of January 31st. So you have to debit rent expense, debit, and what should be credited? Prepaid rent. How much? $2,000. You should not credit the cash. Why? Because we had already paid the cash in the beginning, and we have the prepaid rent account here. Okay. So that is why we are crediting the prepaid rent account. Okay, next we have supplies used during the month. How much? $200. So you have to debit supplies account, supplies expense account debit, and supplies asset account credited. How much? $200 and $200. So dear students, look, we have supplies account $1,200. So out of this supplies account, $200 converted to expense. So that is why we are crediting, mean decreasing the supplies account, and instead we are increasing our expense account. So next we have, so we recorded the first transaction, the second one, and the third one is goods supplied to ABC during the month $3,000. It means we have a liability, right? How much liability we have? $9,000. We had received cash, right? But out of $9,000, now we have supplied $3,000 amount of goods. So we can claim that $9,000 should be reduced. How much? $3,000. So that is why we have to debit what? Unearned sale account, and we have to credit the sale account. How much? That is $3,000. Look, dear students, why we are debiting unearned sale account? Because it is decrease in our liability. Our liability decrease, and that liability converted to the revenue. So our sale revenue account increased. Okay. Next we have salaries of employees due $10,000. So salaries expense incurred, so you have to debit salaries expense account should be debited, and salaries payable account should be credited. Why? Because expense incurred, but we have not yet paid. Simply. Okay, next we have goods sold to Ahmad and Bro $5,000 but not yet recorded. So simply we have sold goods and accounts. So account receivable, which is Ahmad here, debited, and sale account credited. How much? 5,000 and 5,000. So dear students, when you sell goods on account, right, and you have earned the revenue but you have not received the cash, so it means that is credit transaction. So account receivable debit and sale credit. Our asset increased and our revenue also increased. So dear students, now in the second step we are moving all these balances into the adjustments column. Okay, and how to do it? Look, the first we have rent expense. So check, are we having any rent expense account here? No. So if there is not available, simply it is not necessary that we must have all accounts of the adjusting entries here. So if any account is not available, just add it here. Okay, so a rent expense account debited. How much? $2,000. Okay, and what is credited here? Prepaid rent. So are we having prepaid rent account? Yes, we are having it, and this is here. Okay, credited $2,000. Okay, next unearned sale account debited. How much debited? Simply, okay, look, unearned sale account, simply unearned, we have supplies expense. Supplies expense account debited. How much? $200. So are we having any account related to supplies expense? No, we are not having. So just include it here. Supplies expense account debited. How much? $200. So simply debited $200. Okay, make sure all adjustments should be recorded in the adjustments column, not in this column. Try not to be confused. Okay, Okay, so salaries expense we have, supplies expense we have debited $200. Supplies asset, yes, we have a supplies asset account here. Okay, how much credited? That is $200. Next we have unearned sale. So we are having unearned sale accounts. How much? 9,000. So debited $3,000. And are we having any account related to sale? Yes, we have it. So sale account credited how much? $3,000. Next we have salaries expense. So we are not having any salaries expense account here, so you have to include it here, edit here, salaries expense account, right? Should be debited how much? $10,000. Okay, next are we having any accounts related to salaries payable among these accounts? No. So simply add this account, salaries payable account should be credited how much? $10,000. So next we have, dear students, account receivable. Yes, we have account receivable here, and that is to be debited $5,000. And we have sale account to be credited $5,000. So keep in mind, sale account credited or adjusted 2 times. Okay, 3,000 here and 5,000. So already credited 3,000, and additionally we have to credit it how much? 5,000. So equal sign 3,000 less 5,000. So total 8,000 credited. Okay. Okay, dear students, once you are posting all these values, then next you have to balance it. Okay, simply have to balance. So sum and take all the values in the range. Okay, and then press enter. So how much values we have? Okay, that is 110,200. Just drag it to the right. Okay, both sides are not equal, so it's good. If both sides are not equal, it means there are mistakes. We have not posted all the values, so we look, just check it. 2,000 rent expense we have posted here, right? And prepaid rent, yes, we have credited the prepaid rent account here. Look how much? 2,000. And supplies expense debited 200. Yes, here look, supplies expense we have debited 200. And next supplies account credited 200. And next unearned sale account debited 3,000. And next we have sale account credited how much? 3,000. Yes, here is a point. Yes, here credited 3,000. Okay, then we have salaries expense 10,000 debited. Okay, here is mistake. Look, because this is the benefit of the balancing, because the salaries expense not debited $100,000, it is debited 10,000. Okay, so make sure if all these two sides are not equal, it means you are maybe missing a value or maybe incorrectly posting a value. Okay, so now both sides of adjusting entries are equal, 20,200, right, in both sides. Okay, finally we have adjusted trial balance. So dear students, in adjusted trial balance, so the debit should be added with the debit and the credit should be added with the credit, simply. And the debit and credit should be subtracted from each other. Okay, so look at the cash account. Does the cash account have any adjustments here? No. So directly the cash account goes into the debit. Okay, just click on this value. Okay, next we have stock. Stock is not having adjustments, so the stock value is directly coming here. Okay. Okay, capital account is not having any adjustments. Look here, no adjustments, so click the value. Okay, purchases account that is debited is not having any adjustments, so equal sign and click on purchases account. Next we have account payable is having no adjustments, right? Just move it into the credit. Okay, here look, we have adjustments. Account receivable is having adjustment, so the debit and the debit should be added, both of them. Okay, so equal sign 19,000 plus 5,000. Very much simple. The debit and the debit should be added and the credit should be subtracted. Okay, next we have purchase return. So purchase return is having no adjustment here, so just click on the purchase return values here. Okay, and next we have sales. So sales account, look here, we have adjustments, so credit and credit should be added, so equal sign, both sides should be added. Okay, and sale return is in debit value and it has no adjustment, so that goes here directly into the debit. Okay, here this is very much important. Furniture is having no adjustments, so just simply move it into the debit side, okay, not into the credit side. So equal sign and click on the furniture. Okay, next we have unearned sale. So we have credit in the unearned sale in the debit. So as I've explained, the debit and the credit should be subtracted from each other. So what you should do here, from the 9,000, if you subtract 3,000, so remaining we have 6,000. But keep in mind where to show the 6,000. So if the remaining balance is credit, you have to show it in the credit. Okay, if it is balance, then show it in the balance. So equal sign, from 9,000 you have to minus 3,000. Okay, in this manner you have to compute all the values. So we have computed all the values. Okay, so dear students, now you have to add the debit and credit sides. Okay, just drag this formula to the right. Look, both the debit and credit are equals. Keep in mind, so if there are any mistakes in these two balances of adjustments column, right, so the adjusted trial balance will not be equal. So make sure first you have to add that your accounts, your balances are okay. If they are okay, then you have to compute the adjusted trial balance. Okay, and then finally you have to add them. So dear students, simply what is the conclusion? We had an adjusted trial balance and this was not adjusted. So what we have done, at the end of accounting period there were some adjusting entries, then we have recorded them, and then we posted all these values into the adjustments column, and we have adjusted not all accounts, only those accounts which are needed to be adjusted. Okay, depending on these adjusting entries. Okay, so look, a number of few accounts adjusted here, and many accounts they have not been adjusted. So then finally we computed this column. And keep in mind, inshallah, in coming class we will make the financial statements from this adjusted trial balance. Okay, so wish you good luck. I hope you have learned. Have a nice time. Assalamu alaikum wa rahmatullahi wa barakatuh.